So the Bank of Canada has made its first rate adjustment in over 2 years that it's been hiking rates. What is this going to mean for the Brantford real estate market? Well, I've got all the up-to-date information for you right here in this video. My name is Jeff Thibodeau. I'm a local real estate broker where I've been helping people just like you make smart real estate decisions here in my hometown of Brantford. I've been doing this for over 15 years, lived here for over 40 years. So if you need any help or have any questions, but anything real estate related or Brantford related, all you need to do is reach out to me. My contact information is right in the video description below. In today's video, we're going to be diving into the most recent news headlines and of course, the most up-to-date statistics on the Brantford real estate market to get you the information you need to make a smart decision. So let's dig right into it. The big news headline is that the Bank of Canada finally has decided to bring the rates down. So this announcement just happened last Wednesday. It was the June announcement. There's 4 more announcements coming this year. What really happened is we've gone from an interest rate hiking cycle to a pausing cycle, and now we're going to an interest rate reduction cycle. So this could be seen as the first of many interest rate reductions, although the pace of them and how low it eventually goes is really still up for debate. Now, a lot of people will be wondering, how is this going to affect the real estate market in the short and medium term? Well, in the short term, I don't think it really makes much effect at all, to be quite honest. A 0.25% shift in the variable interest rate really isn't changing the mortgage math for anybody. Not many people are getting variable rate mortgages right now. Most people are getting fixed rate mortgages. And so we'll be watching for those to come down potentially later this year and spur some interest. What it does do is it signals a psychological shift from that, interest rates are on their way up and will get higher to interest rates have peaked and will come down. So that becomes the new dominant mindset and news cycle. So that should fuel some extra activity as affordability improves a little bit later in the year when rates do come down further. Now, translating that into what's just happened previously. So the rest of the data, we're talking about May, before this announcement was even made. So it'll be really interesting to come back next month and see the June data, the July data play out, and if these changes in interest rates have increased the buyer demand. Let's see what's been going on right now, though. What I put together here for you is what I call the big 6. These are the 6 main statistical drivers of the real estate market, the things that we measure. And I threw them all on one slide here. It can be a lot to look at, but let me just walk you through it so we can understand what we're looking at. And then we're going to spend the rest of the video going into these statistics to really explain what each of them means and break it down even further. So last month, we saw the sale price come down a little bit, down to $605,000 for the median home here in Brantford. That was down 5.5% from April, where it was up a little bit. And it's also down almost 12% from last year, which was significant. Last year, it peaked in May, and then it slid down for the remainder of the year after they started raising interest rates again in the summer, but we'll get to that in a minute. The offer percentage came in at 98.8%, which was pretty much flat from last month. That's still a nice, high, strong offer on average. It was down a little bit last year, again, where last May was a significantly hotter real estate market. The days to sell went up to 16. That's a jump from 12, so 4 days longer on average to sell a home in May than compared to April. And while that's just a 4-day slowdown, it is a 33% slowdown in the actual math of those two numbers, so it's significant. The number of homes for sale is up to a new peak. It's up 13.3% on the month, up over 40% compared to this time a year ago, and this is the new high point in quite some time. So there's a lot of choice out there for buyers, even though affordability is still pretty rough. The number of homes selling came down in May, which is atypical. Normally, May is quite a busy market. Here we saw a 12% pullback from the number of sales in April, which was a nice busy, spring month, but May coming down from that level, and actually almost 25% slower May this year than last year. And the last statistic we look at is the number of new homes coming on the market. And so that was up, it was at 280, up just slightly from last month and down just slightly from last year, but basically, flat on those two numbers. So all this data combines to tell us, okay, the sale price is down a little bit, kind of hanging on. The offer prices are still pretty decent. The time to sell a home's gone up a little bit. So more homes are selling with conditions, or buyers are just taking a little more time to act. The inventory is on its way up. the demand came down and the number of new houses hung on. So basically we have a real estate market that is cooling slightly through May, which can be seasonal. We typically see the market accelerating through the spring and then cooling off over the summer before it gets another little fall bump. And so what might have happened is the spring market may have come and gone kind of a month early this year, and we're seeing things slow down a little bit already in May. I will say at this moment in the video though, 1 month isn't a trend yet. So to see things slow down a little bit in May, we really want to come back and look at the data again in June and July and see a trend versus just 1 month kind of anomaly or blip in the data. So it's too early to make a call yet, but May was a little bit slower and it came a little bit earlier than we would have expected compared to previous years. Let's dig into these numbers though, try to figure out exactly what they mean for you, whether you're buying a home, selling a home, or just interested in what your Brantford home might be worth. If we take a look at the average sale price chart and we look back, a couple things I really notice, on the right-hand side of this chart, you can see the home prices trying to find their new equilibrium after that incredible run up and then 2022 pull back. And you can see that we do have an upward trend in that line from its low point of October 2022 to today. It is bouncing around a lot, but it is making its way back up, and that's without interest rates coming back down. Now that we're going to have interest rates coming back down, which I'll show you in a next slide, we could expect that these sale prices will trend back upwards at a little steeper pace than they actually have been over the last year. I have this chart here which actually puts the median sale price alongside the interest rates on the same chart. And you can see the blue bars representing the Bank of Canada overnight rate. You can see there in the 2020 year and into 2021, they were almost zero. They were at 0.25. And you can see how quickly that red line was accelerating upwards. And as they came in and they increased the interest rates, that's when you saw the pullback in the pricing. And now you can see that red line trying to find its new level. Well, on the far right side of this chart is our first little blip down on that blue bar. And we can expect that as we continue throughout the remainder of this year and next year, that there's going to be further rate cuts, making it easier to qualify for mortgages, bringing the cost of borrowing down for everyone. And that usually reflects in an increase in housing prices. Before we move on from average sale price, I want to just take a moment to compare Brantford to its surrounding communities, because this is one of the things that for people coming from outside of Brantford, this is one of the main drivers to decide to move to Brantford, is that you're getting a lot more house for your money here, or you're getting that same house at a much smaller amount, so that can be more affordable that way. Either you get more, or you can choose to get the same but pay less. And you can see that on this chart of everywhere in the surrounding area, Brantford comes in as one of the most affordable. In fact, the only two more affordable communities are Simcoe and Woodstock, both of them much smaller communities and much further away, almost basically non-commutable to the GTA area, where Brantford still sits at this great place with the 403 running through it on the western edge of the greater Golden Horseshoe, where you can live in Brantford and commute in almost any direction to major employment centers. So we see Brantford coming in at 615 so far this year. That jumps immediately to 689 just to get over into Hamilton. And then even further, if you want to go up to Kitchener or Cambridge, we're talking about 740, 746. As far as Guelph, where you are closer to the GTA, and places like Milton coming in at over $1 million. It's quite crazy. Even our neighboring town of Paris, the price is $200,000 higher for the median home, only 15 minutes away. So Brantford really still does have an affordable appeal, even though if you've lived here your whole life and you're looking at, $615 for the median home price just to get into the market right now, compared to maybe 10 years ago, you're thinking, what? This is crazy. But we have to remember we're part of a large regional real estate market, and Brantford, sits kind of where it should in terms of affordability. And as our neighboring communities continue to rise, so will we in average price point. The first statistic that I think is most interesting to study this month would be the demand numbers. So we did see the demand for homes in May pull back, and I could almost feel this right out of the gate in the first month of May. The weekly numbers were actually below where they should be. And it gave us an indication, okay, maybe something's going on where we had the rush and the energy of the market in April, and May's actually going to be a little bit of a pullback. So you can see with the blue arrows here, I've highlighted all the previous Mays, and they were coming in, either as the peak of the market or we saw in 2022 was a weird year because the market was decreasing. So it had a really early rush and then May kind of slid back. Last year, May was part of the peak months, still with 163 homes sold. And this year it pulled back to only 135. So it's actually the smallest May on this chart. And it's going to be really interesting to see if that was it, if that was our rush of demand for the spring and it's actually quite quiet for the rest of the year, or is this May number just a weird anomaly where people waiting to hear about the interest rates, they're maybe waiting for the back half of the year. We shall see. But either way, that was quite a dramatic pullback in the amount of demand in the housing market in May. Next I like to look at the statistic called the month's supply of homes. And this really gives us our indication whether it feels like a buyer's market or a seller's market. I'm actually going to get into what those markets feel like in just a couple slides. But just so you know, the higher this number runs, the more it's a buyer's market, the calmer it feels, the more the buyers have the negotiating power and choice, and the more the sellers are competing against each other. And when this number gets really low, at 1 or even potentially sometimes below 1, that's when we get that really crazy seller's market where there's buyers lining up for everything. They're bidding up the prices of homes. Homes are selling almost immediately. That's when you get that behavior. And so we can see heading into May and through May, we actually continued to rise. So the market continued to shift towards favoring the buyers to its highest point that you can see on this chart, sitting around, I think it came in at 3.1, 3.2 on this chart. So that means for every home that sells, there's 3 homes for sale. Or, you could look at it another way, that for every home that sells, there's 2 that go unsold. So every 3 sellers are competing for just 1 buyer every month. And that's what we call a balanced market. That's fairly normal. When that number starts to race up to, 4, 5, 6 or more, that's when you really see it feel like a buyer's market. Now, it's important not to just look at this one single number because Brantford does kind of have layers to its market. So I like to break this number out by some pricing brackets. And what I've done here is to show you the different feel of the different markets here in Brantford right now. The lower numbers here, so the $599 and less, or the $600 to $799 price points. These 2 bars, sorry, the 2 lines at the bottom of the chart, the light blue and the red. And you can still see they're running very low still. They're our most active markets and they are very hot, right? So we're seeing lots of bidding wars, lots of homes go over asking, very short time to sell, just really not enough quality homes on the market for the number of people who are shopping in these price points. When we jump up just one level for this bright blue line where it's 800,000 to $1 million, what's happening there is there's just slightly more supply and just a few less buyers. Right? It's a higher ticket, purchase, and there's just not as many people shopping for those homes, yet there are lots of people trying to sell homes in that price bracket. And so you see that number is just a little bit higher, coming in just above 4, meaning it's hanging out in the balanced territory. It's going to feel a lot different. You're not going to feel as rushed to make an offer. You're probably not going to be in competition. And as a seller, you're going to feel like you've got more for sale signs in your neighborhood that are your competitive listings. Now you see the dramatic bump that happens on the white line. The white line is $1 million plus homes in Brantford marketplace. And up until recently, $1 million homes were kind of rare here, but with the building of newer, larger homes in the new construction subdivisions and the run up in pricing, we've seen actually, lots of homes break the $1 million barrier. The challenge right now is there is a ton of these type of homes for sale, especially in the newer subdivisions, and there's just not as many active buyers out there right now. $1 million is a big price point with today's interest rates. It also is requiring a 20% down payment once you cross that $1 million threshold, and a lot of people aren't just going to be approved to borrow that type of money. So you've pretty much got to be bringing a bunch of equity from another property. Not many people are going to be looking at the $1 million price point as like an entry level into the market. So these are a lot tougher to move right now when there is so many of them on the market with so few buyers actually shopping for them. There are still sales happening. It's definitely not zero, but it's just if you're a buyer in the $1 million plus price point, you have a lot of choice when you come for a weekend to come view homes in Brantford. You're going to be able to look at a lot and really pick what you think is the best deal, where the sellers need to look around and think, oh, wow, there's lots of competition here. We need to position our homes so that when we get that viewing, that buyer's going to think this is the one I need to make an offer on, versus, we can just sit and wait. To break this down a little further, I've gone really into detail. Sorry if this is too much detail for you, but I'm a stats geek and I like to really analyze this stuff. When I look at these same price brackets in a table format here, you can see the month supply that I was talking about at under 600 grand and 600 to 800. We're still have a 2.1, 2.3. That's still a seller's market. That's a very fast-paced market. Hopping up into the 800 to a million, this is real-time data the last 30 days. It's sitting at 3.2. So it's right on that cusp of a seller's market and a more balanced market. But then that jump, this dramatic jump, we get up to the 12.2 month supply. That means there's 12 homes for sale and only one of them is going to get sold in the next 30 days based on what's just happened in the last 30 days. So it's very much a buyer's market. And the other number I track here, which we don't really make charts out of, but I call it the new supply rate, which is basically how fast the new inventory is coming on. And you can also see that, for the lower price points, that number is sitting at 1.8 and 2, meaning there's kind of 2 new listings coming on the market for every one that sells. And that jumps up to 2.4 for the 800 to a million, but it makes a huge jump again to 5.8, which means there's been a rush just recently. There's been an influx of million plus listings coming on the market again. So there's more competition coming online and not necessarily more buyers. So very different depending what price point you're shopping at. Really important to understand this when you're either buying or selling, because your strategies are going to be very different in these different price brackets. Just to visually explain, so because sometimes I get some questions about, what actually are you talking about? What is a buyer's market? What is a seller's market? And so I just wanted with some emojis here to visually explain this. So on the left, we've got this idea of a buyer's market. A buyer's market is a market that favors the buyers. And the reason it favors the buyers is because there is lots and lots of choice and relatively few other buyers. So that's represented here by lots of house emojis and not so many smiley face emojis. So what happens is when you look at a market like this, we think, well, who's competing against each other? It's actually the sellers are competing against each other to attract that buyer. So what you have is the sellers that's kind of willing to let their home go for the best price, or does the best job preparing their home and marketing it and really attracting that buyer. They're going to be the one that sells. While the ones that are slightly overpriced or poorly marketed, they're going to sit on the market. And unless they, get desperate and make a big adjustment to their price, they're probably going to stay sitting on the market. Well, the new listings get the attention. So it's really the sellers competing against each other to attract the attention of the buyers. That's a buyer's market, and that's the conditions. In a seller's market, things completely flip. This was, our pandemic market, especially the 2021 year. There were relatively few homes for sale, but there were tons of buyers. Like every listing had a lineup of buyers. And when this happens, the sellers are in control because it's actually the buyers competing against each other to make the strongest bid on a house. So you're going to have more than one person interested in most properties and be submitting those offers, and whoever makes the best offer is going to be the winner. So naturally that's going to make the prices escalate. So that's why understanding these different conditions are really important, because knowing which one you're in really has to change your strategy, right? If you're taking buyer's market strategies into a seller's market, you're just going to lose, and vice versa. But if you understand this is what's going on in the reality of the marketplace I'm either buying or selling in, then you can plan your strategy to win versus try to fight against that market condition. Just taking a look at the demand again before we move on, the year-to-date demand is actually pretty dramatic, how low it is. So we are 9.7% behind last year's demand up until this point in May, right? And we're actually 39% behind the peak year of 2021, when the most homes, kind of ever were sold in a single year in Brantford. So this number is actually pretty low, which again tells me we've got a bunch of pent-up demand. There's lots of people out there that want to be homeowners or want to upgrade to their next level home or want to move for whatever reason, but the economic conditions are not supporting that. Either their ability to qualify for that mortgage, or their certainty about their job, or their other bills that they've got piling up, credit lines, credit cards, whatever. So what we think is happening is there's a lot of people that are kind of sitting on the sidelines. Their plans and dreams haven't changed, but their economic conditions have. So when that turns around for them, which could be interest rates coming down, it could be things, looking better for the economy in 2025 and beyond, that's going to bring a lot of those buyers back off of the sidelines. So we can expect demand in the future to be stronger because it feels a bit suppressed right now. And just a little thing to note here, I wanted to take a look overall at the sales in the market and try to figure out where is that drop of demand happening. So this is a little visual tool I used for that. So here what I did is I put all the blue dots there, April sales, when it was actually really busy. And then I overlaid this slowdown in May in red. And I can almost see where the slowdown was mostly happening. There's this area between 800,000 and 900,000 where you can see a lot of blue dots. So there was actually a lot of sales happening in that price range. And even further out, you know, that million, 1.1 to 1.2, you can see there's 4 blue dots out there. When in May, we're not seeing as much activity. I kind of see a hole there. So you can see that the demand actually at kind of the higher end price points has pulled back even more than in other areas. And this makes sense again too, if the market always kind of slows down from the top and then speeds up from the bottom price-wise. So it's interesting to be able to see that visually on this chart. It's kind of nuanced, but I think you can see what I'm pointing out there. So looking into these sales and trying to figure out, okay, what's really going on between buyers and sellers? What's really happening at the offer table? One thing we can look at is the offer strength. We call this the listing to sale ratio. So it is the sale price reflected against the asking price as a percentage. And so last month it came in at 98.8. And you can see that since, you know, about spring of 2022, we've been hovering, you know, right below that 100% marker, which is a typical normal real estate market. Where the line was way above in that pandemic market, that's the weird market. That's the one that, you know, we had never seen before. To have the average offer be 130% over asking just doesn't actually make any sense, and it's not fun for anybody, sellers or buyers. I mean, it's great to see a crazy offer come in at your house, but you don't want to gamble like that when the numbers are this big, right? You'd rather kind of be sure what your home's worth and put it on the market and get what it's worth. And that's what's happening now, right? Is much more the offers are coming in at and around the full price level, a little bit above, a little bit below, and we'll break that down in another chart here. So this is all the sales actually one at a time. Every red dot is a sold house in May. And I've bolded here the 100% line and the 5% over and 5% under. And you can see the majority of the sales are coming in that band. We've got tons of activity happening, you know, between full price and 5% off. So just a little bit of negotiation happening between buyer and seller. We've got, you know, a small chunk that are going 5% up to 5% over asking. You're seeing a smattering of homes that are going for those crazy bidding wars. And normally right now in this market, it isn't necessarily that they're going tremendously over their market value. It's actually that they were significantly underpriced to begin with. So they're artificially, you know, $100,000 or more underpriced. And then they're driving up this kind of wild bidding war on the property. Much more of a rare occurrence than, you know, those smaller bidding wars, just slightly over asking, or the most dominant strategy right now is that slight negotiation. So it's really important to kind of look at this chart and figure out where you're going to end up in terms of price point and see what the other buyers and sellers are doing, so we can be on trend with that and not try to, you know, unintentionally, you know, do a wild out in left field strategy that's really not working. So you can see that definitely most of the bidding war activity is happening kind of at 700 grand and below. The upper right side of this chart is pretty quiet and dark. You know, you do see the one bidding war there coming in just slightly under 1.1 million. So that's the trend going on for offer prices. So the days on market is an interesting chart for us to look at. It's a lot less consistent than the offer price chart. We can see that as the market was slowing down in the end of 2022, the days on market ramped up to being about a month, just under a month on market. And then it came back down in the spring market last year and ramped itself back up into the winter. Well, again, we've had the days on market slide down in the spring, and now it's turned the corner. So we were just at 12 days. April was our fastest paced month on record this year, and it's slowed down, you know, 33% slowdown up to 16 days. Now, again, it'll be interesting to see whether this hangs on for the summer, or actually, you know, we are seeing the market kind of cool off a little bit and things take a little bit longer to sell in the back half of the year. Let's flip over to the supply side. So again, on this chart, I've highlighted last year's Mays with those little red arrows. And you can see that at 280, it's actually not that busy of a May. We've had some busier ones, 299 listings last year, 323 listings in 2022. So, you know, it is a normal number of new listings come on the market. What was weird in May was that the demand pulled back. And so this is going to keep our inventory high. But again, if you look at this chart, you can see that after May, we usually see the number of listings coming on the market slow down. So this, if you're a buyer, you know, the amount of choice available right now and the pace of new listings coming on the market, it's probably the fastest it's going to be all year. And there's probably going to be less homes on the market and less new homes coming on the market month after month is the typical, seasonal pattern for our marketplace. And just very quickly, I want to take a look at the inventory numbers, because this is a big kind of hidden driver. Again, when you're in the business like me and you're watching this year over year, you can see these trends. When you're just out there buying or selling a home today, you're only dealing with the situation you've got today, the market conditions you have today. But as you can see here, we actually just hit a new high point that we haven't been at since May 2015. And in real estate terms, that's a long time ago. Like, that's almost a decade of real estate data here where the inventory in Brantford has been lower. And you can see this trend where, if I extended this chart back beyond 2014, the trend was just declining inventory year over year as Brantford was becoming a bigger and bigger city, and it was getting closer and closer related to the GTA real estate market. And then we really slid into a busy year, the early part of 2017, where inventory was so low in the winter. We had this crazy dip, kind of three, calmer years there of 2017, 2018, 2019. And then inventory was dropping again to its crazy low point of the pandemic, and we've been rising up again. So again, this is another chart where if this is peak inventory for the year and it bounces around a little bit, that seems pretty normal for the last decade in Brantford if we get rid of those crazy hot years. But if inventory keeps growing, if a lot of sellers, decide in the back half of this year to put their home up for sale and demand doesn't keep up with it, we could be in a situation where we're back to 2014, maybe even 2013 inventory levels. We really are at a pivot point for our market. The only thing really holding us back, and the one thing I want to talk about, I'm glad you stuck around to this part of the video, is the new housing trends, right? So every city has its new home target, and new homes are really the answer on the supply and demand issue. Even a resale home is just being traded from one person to another. It's not a new home that was created, right? Even when we put it up on the market, it already existed as a house. So when we hear people talking about new housing supply, we're really talking about building new houses. And Brantford's been doing amazing for the last, 20 years, basically all of West Brant, lots of infill development. But right now, there's been a huge slowdown. Most of the builders have paused from those boom years. They're not even releasing new lots. They're holding off on projects. You're seeing projects get approved, but you're not seeing construction start. And that's actually reflected in the data here. I've highlighted in red, but there is Brantford's target, a 10-year housing target of 10,000 new homes, which actually really isn't even enough to keep up with the demand, right? But this year so far, they've only built 63 of the 833 ones that are on the books to be built this year, right? 833 is the goal, 63 is where they're at. That's at only 8% of the goal, when at the time of this report was taken, they should be at 43% of the goal. So what we have is this lag in new housing supply, which may pick up later in the year, maybe next year things start to ramp up, but those projects usually take time. You can't just decide to build a new house and then a new house exists, or even a subdivision or a condo tower. These things take time. So what we're going to have again in Brantford's trajectory here is a real lack of new housing coming on the market. So that's going to continue to put the pressure on the resale market. And I believe we're going to see that playing out with demand numbers increasing in the resale market because there's really no other choice. If no new home builders are offering new units and you want a house, you're going to have to go get one off the resale market. So that's my wrap up for what's actually going on. My outlook for the rest of the year is simple. I think for the next few months, the market's going to have to find its new level. I think a lot of people were thinking that this interest rate cut was just going to wham, increase demand in the market, but I don't think it's going to have that effect. I think it's going to have a psychological effect that takes some time to get down to the actual consumer making an offer on a home. It's definitely great to see that interest rates are moving in that direction, but it's going to take a few more moves and a little more time for people to actually take that news and run into the marketplace with it. But underlying that, we still have a challenge with supply and demand. Brantford is a growing city. It's projected to keep growing. We're actually mandated by the Places to Grow Act to keep growing. And they're announcing all these new construction projects, but I don't see them coming online. So all that growth is going to be going into the resale market for the time being. And that's going to continue to push things in that imbalance of supply and demand. At that same time, if borrowing costs keep coming down through that cycle, I think we can be pretty safe to say that Brantford's short and medium term future do look quite positive in terms of the real estate market. If you're out there thinking about selling right now, a couple key things to understand is as competition increases, which it has been over the last couple months, for you as a seller, it's important to stand out. So taking that little bit of extra time to prepare your home to market and not rush it onto the market, but do it right the first time. Little things like painting, small improvements, making sure the home's really decluttered and staged, and of course, really properly priced. That's going to be the key, and looking strategically against who are my neighbors that are up for sale, what other choices did the buyer have. I want to make sure when the buyer comes to view my house, they walk away thinking that one's the clear deal. That's the ones that buyers write offers on. On the buy side of things, I think you have an opportunity right now. If you have been waiting for prices to come down or waiting for choice to open up, I think we're at the influx of those two variables. We got the most number of homes on the market right now, and prices are hanging on, like jittering around from their low point. All indicators are that the prices should start to move back up. So I don't think prices will be going any lower than they currently are. I think you'd be doing good to get into the housing market at this level when we look back in the future. Of course, the problem is affordability on the buy side. So if you're struggling to qualify for that mortgage, there's nothing we can really do there except wait for fixed rates to come down a little bit. But if you can afford to get into the housing market or do the move up transaction now, I think you'll look back in the future and think, okay, that was a smart idea. Overall, I think there's both opportunity and challenges for people in our local housing market. And my goal always is to hear those situations out and try to make the best of them so we can create winning plans, whether you're deciding to get in for the first time, move up to that bigger house, maybe you're thinking about moving out of town, or maybe you're going to take some of the equity in the home you already own and get into the investing market. Either way, I'd love to hear from you. Thanks for making it to the end of a 35-minute video. Oh my gosh, we talked a lot this week, but I hope you find this information valuable. Please take a moment to hit that like button, subscribe to the channel, and if you have any questions or need my assistance in making a move, all my information is in the video description below. Thanks for being here, and we'll see you on the next video.